Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the wild world of corporate filings, and let me tell you, this one is a real head scratcher with a touch of desperation. Today we're diving into a special report from Xilio Therapeutics Incorporated, and it is all about a proposed reverse stock split. Think of it as a company trying to make its stock price look a little more respectable, but there are definitely some big what-ifs to unpack here. Stick around because sometimes these moves can be a sign of trouble, and we're going to decode what it really means. Also, if you like getting these kinds of straightforward breakdowns, make sure you subscribe and join our Discord community. The link is in the description below. So, Xilio Therapeutics is proposing a reverse stock split. What does that mean in simple terms? Imagine you have $10 bills, and the company decides to swap them for one $10 bill. Your total money is the same, but you have fewer bills. In the stock market world, this means they are going to consolidate their shares. So for every, say, 10 shares you own, you might end up with just one share. This isn't just a casual decision. They've called a special meeting of stockholders for the 23rd of February 2026 to get the green light for this. The reason they're doing this is pretty clearly stated: to boost their stock price. Their stock has been trading below $1 for a while, and if it stays that way, they could get kicked off the Nasdaq stock exchange. This is a huge deal because being delisted can make it much harder to trade your shares and can signal serious problems to investors. They've got a deadline of the 30th of March 2026 to get their stock price back above $1 for at least 10 consecutive business days. This isn't the first time they've heard this. They received a notice about this issue back in April of 2025. They did manage to get a bit of breathing room by moving to the Nasdaq capital market, and they were given an additional 180 days, pushing the deadline to March 2026. The big reasons they're pushing for this reverse split are to avoid being delisted, to make their stock look more appealing to bigger investors who might avoid low-price stocks, and to potentially improve their ability to raise more money in the future. They also mentioned that it could make their stock more attractive to individual investors who might be put off by the higher commission costs associated with low-priced stocks. This proposal gives the board of directors a lot of power. They're asking for approval to do a reverse stock split at a ratio anywhere from 1 for -2 to 1 for -30. The exact ratio and when they'll do it is completely up to the board. This flexibility is something they want. Of course, they will announce the exact ratio before making it happen. Let's look at some numbers. As of the 2nd of January 2026, Xilio Therapeutics had about 67.5 million shares of common stock outstanding. Now, if they do a 1 for -2 reverse split, that number would drop to around 33.7 million. If they go with the extreme one for -30, they'd be left with just over 2.2 million shares outstanding. This also affects stock options and other awards. For instance, if they do a 1 for -15 split, the shares reserved for options and restricted stock units would drop from about 39.4 million to about 2.6 million. This means fewer shares will be available for employees and option holders in the future. Now, the company is pretty upfront about the risks. They acknowledge that reverse stock splits don't always work. Sometimes, even after a reverse split, the stock price continues to fall. There is no guarantee that the stock price will stay above the $1 minimum for Nasdaq, or that the reverse split will even attract the investors they're hoping for. They also point out that a lower number of shares could actually hurt liquidity, meaning it might be harder for people to buy and sell shares. This is a classic case of trying to fix a symptom without necessarily curing the disease. For the tax folks out there, they've included a section on the tax implications. Generally, this kind of move is considered a recapitalization, meaning you wouldn't typically owe taxes on it. However, if you end up with a fractional share and get cash instead, you might have a small capital gain or loss to report. It is always a good idea to talk to your tax advisor about this stuff. They've also included Proposal 2, which is essentially asking for permission to postpone the meeting if they don't get enough votes to approve the reverse stock split. This gives them more time to lobby shareholders and try to convince them to vote. Yes, it is a common practice, but it highlights their concern about getting the necessary approval. Looking at who owns what, a few big players hold significant stakes. Gilead Sciences Incorporated, for example, owns almost 20%, GKCC LLC holds just over 10%, and several other investment firms like Bain Capital Life Sciences Investors, LLC Coastlands, Capital Partners LP, and Frazier Life Sciences Management LP also have substantial holdings, all hovering around 10%. The top executives and directors collectively own about 9% of the company. Ren Russo, the president and CEO, owns about 5.4%. Christopher Frankenfield, another executive, has a smaller stake, around 1.9% in my opinion. The This reverse stock split is a clear sign that Xilio Therapeutics is in a tough spot. They're fighting to stay listed on Nasdaq, and this is a common tactic for companies in that situation. The fact that the board wants the flexibility to choose the exact ratio and that they've included an adjournment proposal suggests they're worried about getting the approval they need. While the intention is to make the stock more attractive, there is no guarantee it will work, and it can sometimes signal underlying business problems. The company's future very much depends on whether this price boost does more than just cosmetically adjust the stock price and if they can actually improve their business fundamentals. What is your take on Xilio's proposed reverse stock split? Do you think it is a smart move or a sign of bigger issues? Let me know in the comments below. If you found this breakdown helpful, please hit that like button. Subscribe for more corporate deep dives and join our Discord community for even more discussions. Thanks for watching, and I'll see you in the next video.